Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is January 29th, 2025, and we're diving into the third quarter earnings report of Eagle Materials. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Eagle Materials, a leading U.S. manufacturer of construction and building materials, has just released its Q3 fiscal 2025 results. Let's break down the key highlights and what they mean for investors.
Revenue and profitability overview. Let's start with the top line. Eagle Materials reported a revenue of $558 million for the third quarter. How does this compare to their performance last year?
While the revenue is slightly down from $558.8 million last year, the company managed to maintain a strong gross profit margin of 31.9%. Net earnings came in at $119.6 million, translating to an adjusted EPS of 3.59 cents, which is a solid performance given the challenging weather conditions they faced.
What were the main factors affecting their profitability this quarter?
The adverse weather, particularly in the Midwest and Great Plains, impacted sales volumes in their cement and concrete segments. However, they saw higher sales volumes in gypsum wallboard and recycled paperboard, which helped offset some of the declines.
Segment performance analysis. John, can you give us a breakdown of how Eagle's different segments performed this quarter?
Sure. The heavy materials segment, which includes cement, concrete, and aggregates, saw a 4% decline in revenue to $351.8 million. This was primarily due to a 7% drop in cement sales volume. On the other hand, the light materials segment, which includes gypsum wallboard and recycled paperboard, performed well with a 6% increase in revenue to $201.7 million, driven by higher sales volumes and prices.
What about the pricing trends in these segments?
Cement prices increased by 4% to $156.82 per ton, which helped mitigate some of the volume declines. Similarly, gypsum wallboard prices rose by 4% to $236.11 per MSF, contributing to the segment's strong performance.
Strategic initiatives and market outlook. Let's talk about Eagle's strategic moves this quarter. What are some of the key initiatives they've undertaken?
Eagle announced the acquisition of Bullskin Stone and Lime, a pure-play aggregates business in Pennsylvania, which aligns with their growth strategy. They also repurchased approximately 195,000 shares for $55 million, returning cash to shareholders. Their net leverage ratio stands at a healthy 1.2x, indicating strong balance sheet management.
How does the market outlook appear for Eagle, especially in the context of the Infrastructure Investment and Jobs Act?
The IIJA is expected to drive strong cement demand over the coming years. Despite uncertainties around interest rates and home buying affordability, Eagle remains optimistic about their business prospects, particularly in the gypsum wallboard segment, supported by steady employment and housing supply constraints.
Operational efficiencies and future outlook. John, operational efficiency is always a focus for companies. How did Eagle manage their operational costs this quarter?
Corporate general and administrative expenses increased by 47%, mainly due to higher IT spending and business development costs. Despite this, Eagle's disciplined operational approach and strategic focus are expected to position them well for long-term value creation.
What are the key takeaways from CEO Michael Hack's comments on the future outlook?
CEO Michael Hack expressed optimism about Eagle's ability to navigate economic cycles and capitalize on growth opportunities. He highlighted the company's strong cash flow generation and balance sheet health as key enablers for their capital allocation priorities and strategic initiatives.
Key takeaways. As we wrap up, Eagle Materials has shown resilience in the face of challenges, with a revenue of $558 million and an adjusted EPS of 3.59. Their strategic initiatives, including share repurchases and acquisitions, position them well for future growth. John, any final thoughts on Eagle's investment prospects?
Eagle's strong market position, coupled with favorable industry trends and strategic initiatives, make it an attractive investment. Their focus on operational efficiency and long-term value creation should continue to drive shareholder value.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Eagle Materials' performance in the comments below.